Good afternoon, everyone, or whatever time it is for you there. Um, this isn't really a trading um video right now. This is pretty much a talk about where things stand right now. Currently, I'm at $23.54 in my account. I currently trade on Kraken. Thing is, with Kraken, you can trade stocks. You just need to have some money in your account. Um, and the past few weeks have been rather interesting. This is just over a week, and it shows here. This is 2 cents of a red day. I had a little bit of dust as far as crypto in my account, and it dropped it down 2 cents. But I mostly trade stocks. And an interesting thing happened here on Monday, 16 cents. That's a 0.66% trade. 22 cents, a 1.70% trade. Then on Wednesday, I got $1.02 worth of a trade. On Thursday, an interesting thing happened. I ended up I actually would have had a much higher percentage, but I ended up taking a trade that lost me about 33 cents. Since it took up almost 50% of my profit, I cut my day off. I've got a hard rule. I lose nearly 50%. I go ahead and sign out for the day, therefore preserving my profits. And on Friday, I had a 67-cent trade. And over time, you'll see that even though these are small amounts, on $23.54, it brings me up 11.41% for the entire week. And that's actually a pretty big deal. Now, I'm going to be fully transparent. You go back into the month and you'll see I paid a large learning curve here. But now I'm starting to grow, and over time, I will try and explain to you how this happened. So, to start off, I'm just going to bring this down to the trading charts a little bit. And we'll get off this multi-chart. This multi-chart is real nice because you can keep track of multiple stocks. Now, the first thing I do is I set up my indicators. We have the 20 EMA, the 200 EMA, and the 9 EMA. How do you do this from Kraken? You just simply go over to indicators and you go to moving average exponential. You click on it and it'll bring a chart over here. You click to settings and then you go to inputs and you tell it what kind of EMA you want. You go over to the style. You can list whatever color you want. And also, you can set the thickness of the line, or you can set it however you want to set it. Now I'll go ahead and cancel out of that, and I'll close this one up since I've already got it. The next thing you want to set up is your volume. Now you want to set up the volume because you want to know what kind of, how many people are participating in this. The volume indicates how strong the participation is. I have the MACD here. I have it up here. Some people use it, some people don't. It's not really super important. I just use it kind of as a sort of as a side note to glance at it and kind of get an idea that everything's going in the right direction. It tends to lag, so if it's open, the move is already beginning. I look for a few specific things here. Like right here is a good indicator. I'll look for it to come up, then I'll look for it to drop down. You'll notice the volume for this red is low, and then this spike up indicates participation, and the growing green candles indicate that there's more participation going on here. Now here, happens every now and then. Here, you're saying, why not go with this? Well, there was no pullback like there was here or here, and then confirmation when the buyers step back in. Here, you might luck out and get this big rise, but what happens is a lot of times when you'll see this red, it'll go all the way back down and you can lose a lot of money. So I look for it to grow, then I look for a teeny little red candle, but then I look for the continuation up. And because of that, is how I've seen this. Does it always work? No. Like I said, back here, I traded. I got a really good first setup. Walked away with about 65, 70 cents. And then the next trade dropped me right back down to 36. And that put me into stop trading jail, where I basically closed my browser down and stopped participation for that entire day. Why do I oppose these rules? Because it's very simple. You don't want to continue bad habits, and 90% of the stock market, after you understand the setup, your edge, is psychological. You don't want to get too involved because then you'll get into FOMO, fear of missing out, or you'll get into revenge trading, or you'll do something that psychologically will probably get you in trouble and make you give all the rest of this back, which results in days like that, or that, or that. You'll luck out every now and then and you'll get a trade like that. But letting your psychology get a hold of you results in these instead of like this, where over the last 2 weeks, I've been building myself back up. So that's pretty much all I wanted to talk about today. I hope you have a good day, good Saturday and Sunday, and I'm going to try and update you guys on Monday when I'm back on the boards.